This fall, the brightest minds in finance will flock to Florida for a weekend that will change your life, with insights from the brightest stars in the financial universe and an event that will bring them all together. Presenting the first annual T3 Live Finance Festival at the Mayfair Hotel and Spa in Coconut Grove, Florida, for a weekend you'll never forget and memories that will last a lifetime. The Finance Festival, a Todd Harrison production, brought to you by T3 Live and TradeStation. A portion of the proceeds to benefit the Ruby Peck Foundation for Children's Education and the Crohn's and Colitis Foundation of America. Friday, November 6th to Sunday, November 8th, 2015. Bring your spouse, tell your friends, make some noise, and take charge of your financial future. It's gonna be nuts. Space is limited, so act fast.
Good morning. My name is Scott Redler, Chief Strategic Officer at T3Live.com, and welcome to today's morning call. Welcome to the first day of the fourth quarter. The third quarter is now behind us. As intermediate active traders, we get to navigate quarters. And for the third one, I think it was deemed the worst since 2011 or even 2008, depending where you look, whether it's the emerging markets, whether it's Europe, whether it's China, whether it's here. I think the S&P was off 7-8% for the quarter, but got to put it all in perspective. This was the first 10% correction off the highs since 2011. And where are we? What are we in 2015? So, not a bad change of pace for the action, especially if those like to be short or those who like to embrace volatility, trade two-way action. A change is nice. It brings attention back to the market. It brings, some volume back to the market and just changes the pace and actually gives you a better long-term cost average if you're a macro investor with flows. So as we start the new quarter, as a trader that trades for P&L and for alpha, you got to put some things into perspective and figure out where we can go next. And as far as overseas, up a little bit. China, I think, has their golden week, so their PMI was fine, but it's not trading. You look to see whether or not China could be a headwind or a tailwind for the last quarter of the year. And at this point, you don't really know. What you do is you see the chart here. You go to this is the HEDJ. So let's start with Europe. Europe to actually start the year in the first quarter. Look at that nice trend above the 8 and the 21 day. That was a tailwind for our markets. And then you had this head and shoulders top pattern, with the left shoulder, the head, the right shoulder, and then this was that neckline that broke, that gave you your first shot across the bow that Europe was, at least going to, try and consolidate or correct from what was a huge move. And then since then, you had this, wall of resistance. It lost at 200-day. It's been acting technically weak, and now you fast forward to what you should be watching heading into this quarter. And really, you have to watch this low area. Okay, this is 5250. Markets start to obsess when you have lower lows. As of right now, not in the danger zone to start. Okay, actually a small little higher low here. It did fill this gap overnight. I think Europe's a little off the high, so at this point right now, still broken, but not in the danger zone, for today. Maybe we'll see what happens next week. Now you go back to China, like I was just talking about. China to start the year also, just like Europe, was in a major, major uptrend. Okay, you had it above, you had your breakout right here, and then you had the parabolic first stage move, which we talked about, selling some into that, and then especially when it went on the breaking trend right here. Broke the 8 and 21 day, which when you're even in a momentum country like this, that's when you get out, came below, stayed below, and then broke the 200 day. And now, you look at two things. The last time, let's move this out of the way. Last time, the Shanghai tried to figure out what was next. It built this bear flag, okay, and then continued lower. Now you have another lower consolidation. So we'll see what type of action we get from China by whether it breaks above this, and if it does, maybe that relieves some pressure here. But if it breaks below this and gets back down towards this area, chances are it's going to be, a headwind once again. So as of right now, though, as of today, they're both, kind of in line, and that's why our futures here are getting a little follow-through to yesterday's strength. You know, when you're in a broken environment, we like to use different setups. The H-cell setup, the red dog reversal, we look for tactical trades intraday. Sometimes they can last for 1 to 3 days. And if you look at the chart of the SPX, you will see that recently, okay, remember this low that we talked about that everyone and their grandmother said we had to test? We came within 3 handles of. And you had a red dog reversal. Not a great one, not a potent one, but it was one around this 1871. Okay, here was the prior low. Actually, sorry, 1879. Went to 1871, came back above it. That's your entry, and you had a nice day-and-a-half move. If you took some overnight to see if we can get a little bit more follow-through, you know, which I did, I already sold some spiders pre-market around 192.75, and we'll see what's next. You know, you do have yesterday's high. Yesterday's high right now is 1920, and you know, if you remember this topping tail when the Fed didn't raise rates, that was here at 2020. Then last Friday, you had another resistance come into play at the 21-day. That was 1952. So we'll see, you know, if we get some kind of lower high again to navigate. So lower high, you know, and now we'll see if this zone, I would be, you know, selling longs into this and then figure out, you know, if it winds up reversing here, then all of a sudden, you know, perhaps we come right back into this area. You know, this channel that we were in for the most part of the first 7 months of the year broke in August, which gave us that tradable short setup below all the moving averages. And now, you know, the market's trying to figure out what is next for the fourth quarter. Does this hold? Okay, which it might, you know, because you do have somewhat of what was supposed to be a V turned into a W. And if this W holds, then you'll see real resistance comes in there, and you know, a lot of the big experts out there now calling for a close on the year somewhere around 2000, which would be a decent trade from here, especially if you're not caught, which I don't think a lot of our community is. So anyway, for today, we'll see if this up open holds or not. You do have a jobs report tomorrow. As far as sectors, the IBBs, okay, which also, you know, gave you a trend break here, a head and shoulders top here, you know, to navigate, et cetera, et cetera. I'm not going to start going back. I usually do this in the recap. Here was your neckline. So fast forward, this is where we're at. Okay, some people are along the bios trying to play a bounce. At this point, it's up a little bit. Okay, here is that 824 low at 324. Here was the retest, and now you have a small pivot here that if it gets above this, perhaps you get a bit more room to test the moving average closer to 313. Not saying, you know, not a blockbuster trade, but decent cash flow if that happens. And if they want to push the envelope a little bit, you know, perhaps it gets a little bit higher, but we shall see. This is the key spot now. Here's your lower pivot. We'll see if there's any traction there. You know, so I might as well, while I'm on the bios, I'm going to change this up a little bit. I'll give you 2 stocks to gauge. You have VRX, which has been battered and bruised, and look at this, you know, outside day that could have well got you out of that name, especially when it broke here. And now you had your first up day. So some might be playing a bounce. If you're playing a bounce, maybe it gets to this 191-ish. It did close above yesterday's high, so it's in the game if you can handle that kind of risk. Here's resistance 1. Here's resistance 2. If you like to go with a little thicker names, CELG also very similar. You know, to give a key off on the bios, you know, it's been battered and bruised. You know, here was that ascending channel that looked exactly like the IBB that broke to the downside. It's gotten crushed. Did have a higher low here, so you know, I know it's up pre-market. If you're long this, I would sell some into this 111, and then if it wants to push a little bit higher and you're looking to re-short, maybe you got 114. So resistance 1, resistance 2, and that's basically what you're gonna have to do, you know, with a lot of these different names. If you're in them for a bounce from the past 2 sessions, you sell some strength and maybe even get short. As far as technology, you go to the Qs. Qs did hold well above the 824 lows and did turn up, and you know, coming right back into resistance. So if you are long the Qs, I would be a seller into this, and then some might even short if it goes a little bit higher or not. So at this point, you have a pivot here at 101.87. If it could hold above, maybe there's a little bit more upside. If it opens above and closes below, you know, chances are you should get out of the way. Remember when this broke? That was your ascending channel here to the downside after this topping tail the same day the Fed didn't raise rates. One problem right now for, I think, the Qs is Apple. Apple, the last 2 sessions, while the market was stronger, it's been a headwind. Okay, we all know that Apple broke its channel here. You had the gap down after earnings, giving you an unfilled gap that gave it pressure to the downside. Then you had this ascending channel break right here, and some of us got short, including me, when it broke 112.40. I am not short there now. And now, question is, can it hold here? There is some news out there that suppliers are cutting some chips based on the fourth quarter projections, which would not be good for this. So here is your pivot. If Apple were to break below this 108 today with authority, chances are market probably will notice and come in. And then your air pocket is down here, closer to 105 to 104. So if you like to be short things, today if it breaks it, maybe you get some downside. With Apple, you do get some new flows sometimes. It's the first day of the new quarter, so it might take a little bit of time. The last few days, it's been pushing first before you see the real weakness. So if you wait to see it, then boom, you've been able to act on it. I am an Apple fan, but again, I'm not, I don't have Apple rose-colored glasses. When it's not acting well, it's not acting well. And right now, it's kind of wishy-washy. And if you go one more time back to the chart, which I do think is kind of nutty to look at from this standpoint, you have the weekly chart. And there are some technicians pointing out that you have your left shoulder here, you have a big head or a rounding head, and now this is the beginning of a right shoulder. And take that flash crash out of the way, here's your neckline. If it starts to get below this, okay, it could be very bad for technology, very bad for the stock, et cetera, et cetera, et cetera, and could get you down to there. So at this point, let's take a snapshot of that. That's what the chart looks like. But again, necklines are very, very strong support. That pattern only triggers if it breaks below and stays below. Sometimes it's a trap. So anyway, that's Apple. So we'll see how Apple acts today. So ever since Apple started to go red this morning, the futures came in. A strong stock from yesterday in tech was Netflix. Netflix was up a little bit this morning. We'll see what happens here. This weekly chart doesn't look so great either. But you go back to the daily, and if the market was going to stay some sort of strong, I thought perhaps this could be a vehicle to break this spot. It's nice and tight. So as long as it stays above this trend line, I think it's decent for two-way trades. Below this, it's a short, and then above this, just say 105, and perhaps it squeezes higher. But you're going to need the market to act decent for that to happen. Amazon and Google not really worth anything but a quick trade. Small turn up yesterday. It's up a little bit pre-market. There's going to be a wall of resistance right here that if you're long it, that's where you trim it. If you're looking to short it, look for a sell setup if it tails into that and turns lower. Nasty, nasty bar last Friday giving you your sell signal. Google gave you the same sell signal on Friday of last week also, right when it had that outside day, which was right here. Boom. And now it's trying to come back up. I don't think there's much room here. If you did buy it in the hole and you were in it yesterday, you had a nice little trade. On day 3, if it's up, you sell some. And then some guys might try and short it into there. It's still trapped and building and, on a macro level, okay, but, you have to take your trades within the 1 to 3 day time period, otherwise you can get stuck. Tesla, you can't really say much about. It did open up yesterday and reversed hard. Definitely wishy-washy. I guess, here's your 200-day. That's the last line of defense for the bulls. Below this, and it could be trouble. Above this, maybe it gets a little bit more interesting, and that is a little bit closer to 252. But be careful here. Ever since that little outside day on Friday right there, some momentum's been lost. Okay, when momentum is lost on expensive names, you notice. As far as Fit's kind of in the game. One of the vehicles that I'm long overnight. Came in with some volume yesterday, kind of an engulfing day. I was thinking if we do go and the market hangs in there, you have a small descending channel here. It could get back up towards 40. Decent maybe even for the holidays, but we'll see what happens here. At this point, I'm in some, and we'll figure out if it could hold, just say above 36-ish or maybe even 37 to stay with it. If it gets above this, it could be a decent trade today. In social land, you got Facebook. Facebook, a little wishy-washy. Just like a lot of the high beta names on Friday, they all reverse course. You had your outside day there, then it broke support, and it's trying to bounce. I think there is a little bit more room towards 91.5 if it wants to get there. That's when some guys might try and re-short this. If you were long yesterday like I was and have a little left over, see if it could actually tack on some gains. If not, just get out of the way. Yesterday, Twitter announced that Dorsey is going to be their CEO. It acted somewhat well. I don't think you run out and chase and buy it, but it'll be interesting to see if it could take this out at some point. Right now, you have this kind of channel here, a little bit of an inverse head and shoulders pattern, and maybe after a little time, if they get used to him and he figures out that he could be CEO of Square and Twitter, maybe it acts better. They have been putting out a lot of new products. I see a lot of advertising on there, a lot of people talking about football, this, that. So maybe there'll be a trade, but you just had a 3-day move. So I would, not add there, but maybe trim and see what's next. As far as the banks haven't really done anything special. Jobs numbers tomorrow. I guess if it's a real hot number, the banks might get another push. So maybe you look at Goldman. Goldman has not acted well at all. It did undercut the low here, one of the few sectors that undercut the low, a few stocks. So I don't know. This is probably nothing to turn to. Maybe it gets back up to there. Maybe JP Morgan is a little easier and looks better. There's not as much controversy around the CEO. Not saying there's controversy around Lloyd, but he has, unfortunately, cancer, and sometimes adversity or an unknown creates anxiousness with shareholders. But I wish the best to him. But so maybe go with JP Morgan. This one held well above those lows and had a nice green day yesterday. If if the number is hot tomorrow, I put what I'm expecting in my note yet this morning. You could have a move here. This would be resistance 1, resistance 2. So it's probably opening up a little bit with the future. See if that continues. And lastly, oil. They've thrown the kitchen sink at oil. From Goldman Sachs twice saying it's going to go to 20. Basically, still hanging in there, still a very tight wedge. Then yesterday, you had a big inventory build. It didn't go down. Here is at day 1 when it ignited into day 3. And then we talked about 1420 having to hold, and it did. And now it's very tight here. It's up a little bit pre-market. Let's see if it can get a little bit of follow-through. If it can get above 1490, maybe that helps, oil, and then even some of the oil names. You got the XLE, did not make a new low or held a tiny bit above. It's still broken. This 21-day moving average, it's been below it since May, besides being broken from the 200 days. So maybe it tries to retest that. So you may have a little tactical room. So, in closing, it's a new quarter. We're now on day 3 of a potential move up. The oscillator hit minus 55-ish on Monday and Tuesday, saying, cover some shorts if you made some good money there. Maybe flip long. Maybe you went a little long when you saw the red dog reversal on Tuesday around that 1879 pivot. If you did and you bought more yesterday, and, you definitely sell some today. We'll see if Apple really gets very weak today. If it does, it'll be hard for the market to ignore. If it snaps back to 110, maybe we get another positive day as new flows are coming in, in the beginning of a month and a quarter. And then the next week and a half, I think it's going to be tricky because still in the blackout. If you remember, the week before, September 17th, into the Fed, I'm like, we're going into corporate blackout where we're going to have earnings in a few weeks and companies can't buy their stock back. So chances are, we're not going to have that underlying bid. And that was when we were above 2000, 2020 into that area on the 17th, and we've been 140 handles down since. So we still have about another 2 weeks of no corporate buybacks. So if the market itself, not weak, because if it goes long or short, we'll have to, adjust alongside it. But if the market can hold above, that double bottom and go sideways and then make it through the next week and a half, perhaps some earnings come out, they're not as bad as people think, then buybacks come back, and then November, December, market floats back up. We're not trapped there. It'll be a good time to maybe have a few swing trades on and then, close the year strong versus just making some money back. But we'll see what happens. Every day is different. Tomorrow you have the jobs report. We'll see what happens. I am doing my Redler All Access webinar today if you're a member of my note. If you're not a member of my note, you should go to the front cover of t3live.com and get an example of it. 20 to 30 ideas each day, talking about what I'm thinking, and could be something that could help you with your game plan. If you've been seeing the Financial Festival advertisement, whoa, what a wide array, wide spectrum of personalities and talent and human capital. Not only will we be presenting and providing knowledge, we'll be there all weekend long, by the pool, playing volleyball, going for runs, having a big banquet at night. I couldn't think of a better way if you can get away to go to Miami in November and spend some time with all the personalities and people you've gotten to know and follow for all these years. So with all that said, we'll see what happens today. Follow me on the radio. I'll be on Twitter, and I'll see you after the close. Have a good one.